Welcome back everybody to another market recap video or my signature market review. Now today we're going to be talking mostly about Bitcoin and Ethereum as usual, and I'm going to guide you through the price action, what we're seeing right now. Are we going to form a double bottom? As you can see, I have plotted some very important zones of support and resistance as well. Obviously that includes the resistance at the top and just some general info about the market as well. So before we get into Bitcoin and Ethereum, when it comes to the technicals, let's look at my tweet deck to check a few pieces of news that might actually affect the market these days. So first and foremost, just 2 minutes ago, Johnson dropped COVID-19 restrictions. So that is sort of a dovish type of news for cryptocurrencies in the short term. So essentially what it means is that COVID is passing and the economy is gaining more and more strength. And what it should mean in theory is that people will invest more money into the pound rather than into stocks, and essentially that should draw crypto down. But however, on the other hand, they also said that they're considering action on interest rates, but they will only take them if necessary, which means that they're not really going to increase interest rates just yet, which essentially means that if they don't increase interest rates, there's no stimulus for people to take their money out of stocks or crypto to put into the economy, because once again, the interest rates are near zero, right? So the return will be negligible. So that's pretty much it when it comes to the UK, and generally the world is following in a very similar situation. So the next few months might be very interesting. But as you can see, despite a lot of popular news sources and a lot of analysts saying that, as COVID ends, crypto is going to die. Well, I mean, it's not really happening, right? We are creating a bottom on the chart right now. So I'm going to guide you through that as well. Now, something else that I saw that was pretty interesting was Conlife saying that they haven't actually made up their mind on whether or not the UK needs a central bank digital coin, which is, the fact that they're actually considering cryptocurrencies as a alternative to traditional payment methods and, to tackle inefficiencies in the actual monetary system is a very good thing. Now, how these digital coins are actually going to be used for the future, it's gonna vary from country to country. But something that could be very good for crypto is government issued stablecoins, which pretty much all of these CBDCs would be acting as. So you're not going to have USDT or USDC and, trying to predict whether or not one of them is going to outperform the other or who has more actual real world backing in US dollars. None of that. You'll have the safety of countries actually backing everything. Now, it goes a little bit against decentralization, and I'm going a little bit off topic right now. But these are some of the things that are not going to matter until, 5-10 years from this point. So it's not something you should worry about. Now, when we move into the actual charts, we can see that Bitcoin is slowing down in its bearish momentum. So we did see, so mind you, I said bearish momentum. I didn't say we're in a bear market. Now, why didn't I say that we're in a bear market? Well, how to tell a bull market from a bear market? How to tell an uptrend from a downtrend? Well, when you zoom out on the chart and you're looking at it and you see that it's moving from the bottom left to the top right, we're in an uptrend, right? And that's pretty much what Bitcoin is doing right now. As you can see, this was a huge increase from the 10K level all the way into the 60K level, right? And, nobody really batted an eye. And then when it drops down, from the 60K to the 30K level, so just a half drop, meanwhile, it rose by a factor of 6, right? And then it drops like this, and people are like, oh, bear market, we're done, crypto's dying. And then, we have another leg up. And then once again, we have a little correction, and we haven't even broke the 40K mark, which is quite a significant one, and people are already panicking, right? So there's no panic. There's no need to panic. Even in the worst case, if we do break a little bit below, it's just an extended bull run scenario. So let me show you the worst case scenario on cryptocurrencies, and that is if, COVID disappears, if everybody increases their interest rates, yada, 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 if the whole market is very confident, what's going to happen is, as you can see right here, the market moving upwards, and we might see a extended retracement back into the 30K level where everybody will allocate more funds into cryptocurrency and provide another entry to buy more, and then we're simply going to move up and continue with the bull run, and we will consider this whole shenanigans happening right here as a huge bullish flag formation, right? Considering this right here, and then we're moving into the I'm not going to say outer space, but we're going to be moving upwards. So that's the worst case scenario, and that's something that could happen, 6 months from now if currently rates start being increased, and then 6 months from now everybody realizes, oh god, inflation actually isn't transitory, it's actually a real problem, and we're screwed way longer than we actually thought we were going to be screwed, and then people will start pumping money into crypto and stocks once again. So that is the worst case scenario, but currently we're not even near that scenario. We are bottoming out around the 40k level, and this is a level that you should keep an eye out on. So the 40k mark is very important. If you're seeing some type of a close down below, it's nothing to be scared of, right? But it could indicate some further downwards price action. None of this is a bear market, by the way. Even if it hits the 30k mark, it is not yet a bear market. It is simply an opportunity to accumulate more, and essentially the market can't just keep moving up all the time, right? You can make gains for a year, but then you have to sort of accumulate and chill for a few months if you want to do it again, right? That's the type of a viewpoint that I do have. But currently the most important level that I actually see when it comes to cryptocurrencies is this one right here, or the 37.5k level. This is a very strong rejection zone, and it is something that I would be keeping an eye out on. Another bullish factor is the fact that we are sitting on fib levels. So the 78% fib level is directly on this point right here that I said, which is good, right? It's a very bullish viewpoint. And moving on to Ethereum, we have two zones, also very significant. The top one being more significant than the bottom one. We do have the 200 period moving average also pulling up right here. And we have the 61% fib level as well. So we're going to see if we do form a proper double bottom at this area right here, or if we're going to break down a little bit more below. And for Ethereum and altcoins, the situation is not really that drastic. Ethereum could dip into the 2.7k mark, and the worst case could be down into the 2.5k mark, but I don't see Ethereum ever going anywhere below that. Simply, it's just too useful for the market, right? So that's pretty much it for today's little market recap. Definitely recommend following Live Squawk, First Squawk, Forex Live, Reuters, and Walter Bloomberg if you want to learn about the markets and stay up to date with everything. But I will always be here for your Monday or Wednesday market recap, and I'll see you guys in the next one or the next week. Have a good trading day.